What's up, people? Today we'll be going over, not today's trading, but yesterday's trading. It was a rough day technically for me, but we'll just be going over it. So coming to the day, we had the news. We tapped in, and we had these remember on the 4-hour chart, we had this wick to take out, and we had these CPI and other news days wicks that had lots of liquidity there, so price was targeting them. So basically, coming into the day at that point, we wicked over this, but we still hadn't touched this, and we really should have. We were going to move higher. That was my bias going into the day, and we had this fair value gap. That price resisted by a tick that broke with it. Displacement, so that's obviously a bearish signal, a bullish signal, along with the fact that we had SMT at the very bottom that I noticed going into the morning. There were some mistakes though. That the first mistake was the reason I was even trading today. I shouldn't have been trading because I should have noticed. Look how much price has gone from midnight till 8 o'clock and 9 o'clock in the morning right here. We have moved a total of 205 ticks. So that's not something we really want to be trading in because we've completed most of the average daily range and there's not much. And the New York Open will be not clean. But going into today, there were some good trades. So on the 5-minute, we closed above this bearish fair value gap, signaling price was going higher, but I didn't really completely wait for the retest into that fair value gap. I entered on the 5-minute when we closed above right here. So once we closed above and price came up right here, I entered in because I thought price would quickly go up here, but up to the high, but we did not. So one of the this got stopped out, and I was fine with this. I really liked today, on this day, which was something that did good, but yeah, so we had this 5-minute fair value gap that I was watching going into market open, and as you can see, there was a lot of resistance coming around this fair value gap, this inverse fair value, or no, yeah, this inverse fair value gap, and just this order block in general, and you can see these wicks coming down and resisting all the way up. This is very bullish. And it is a manipulation move you could think of, sort of, and coming from the 830 candle, we have a manipulation inside another manipulation. So I bought one mini contract here, and at market open, price came up higher, and I bought another one right here, another 4 right here, so I was in a total of 5. Stopped at this one at the high, took that out, let this one ride a little bit longer, and I just closed it, I think, right around here when I saw it was disrespect this propulsion block. Here was during the day, I was trading with micros, and I was trying to sell. I sold a micro. Yeah, I think I bought a micro right here or something, and I got stopped out. But it turns out it was on my minis. So yeah, I got really fucked. So here, this trade is basically closed over this change head delivery with like a lot of displacement, and we still had all these highs. And my bias was completely bearish this day. So this was without long, because then price came into this fair value gap, this clean fair value gap, and resisted it many times. You know, on the third resistance, you enter down right here with your stop right here, and price accelerated to the first target, took my profit, moved my stop loss to break even, and got stopped out. So this was kind of where I should have been like, okay, price is not really clean today. But then I saw this get inverse. This was a good trade, and the price taps back into that this fair value gap, along with the inverse that's retesting. That's a very good entry, and the price comes up. Not really enough to take any profits because you're taking it from this inverse, so you need this high to hit. But if you're entering off this fair value gap, you can take off most of this high. So yeah, with this trade, I remember actually, this is the one I took with minis. I took this trade with minis. So I entered my mini, 1 or 2 minis here, and I let it run, and then I got stopped out. So yeah, that was this day trading. And going into my notebook, I can just show you really quickly what I wrote, because when you have a day like this where you're taking all these losses, there's just so many valuable lessons to be learned, first-hand data, like lessons to be learned that you have to record, or else you're never going to really be able to improve from your weaknesses, because it's all about being vulnerable and being uncomfortable and doing what you're not trying to do. So this is not the day, it was the 18th. overall, started to, yeah, just kind of went over it. Lessons learned. So I should have not traded today, and I should have been able to notice that most of the daily range was already formed, along with the fact that I saw the market was not respecting a lot of fair value gaps, like around this area when we were just closed below this, went all the way up here, all the way up here, closed back above, then hit the low. Things we don't really want to see. This was the obvious main mistake made today, and something you should learn from. Number two, don't overtrade. Just because micros lets you have like a smaller risk side doesn't mean you should be taking constantly taking trades, because you really truly just want to find your setup, pretty much find your cookie cutter, and execute when you see it. And if you saw it and you missed it, or you got stopped out, you just wait to see if there's another entry, then you enter with a lower risk, and only if the model shows again. If not, just get off. And then the next thing was just forget about trading your P&L, just forget about the trade balance. Focus on being mechanical, once you find your strategy, take the trade, manage the risk, focus on psychology, enter in the right position. You're able to risk 1% because you have the data that proves 1% more times than not. You just have to be confident in your strategy and stuff like that. So, yeah, and today's review, I'll make it a two-part series where we'll do today's review as well. So today we kept going higher, took out the all-time highs right here, and we just ranged around in this beautiful power of 3, beautiful accumulation, manipulation, distribution. All right, coming into the 9:30, we swept up higher. It was a really good day, but I decided not to trade because I didn't really like what I was seeing. We took out this. We had this beautiful SMT here with ES, because if you go into their chart, they don't take low. But NQ, does take the low, as you can see right here. So yeah, looking from that, there's this just beautiful inverse right here that you could have taken. And this is what I probably would have liked to see, where you go long. Let's say where you close above, you tap back in, you go long right here. Your complete stop loss is below this. Probably should not. If we touch this, we should quickly react. And then your full target would have been that high, technically, not that high, but more like oh wait, no, you would have targeted this, because you would have been confident that price would go higher. You would hold contracts. You would take your first take profit obviously at this level, and then so you would hold this, and this trade would have paid you out. So remember, you want to focus on being able to hold your trades for a good amount of the day, not necessarily your full trade, but your partials, because this could have been, you know what I'm saying, 4.5 risk to reward, but we're talking 75 points. If you hold enter 5 contracts with this much risk, 5 contracts, $5 a contract, and you're risking, what you enter here, you're risking 15, 5 times 5, 25, 25. You're risking 375 on 5 contracts. That's not right. But yeah, so this is good risk reward ratio. There's lots of inverses today, such as this one. Close above. You could have entered off this right here, or this one. But we took out the high already. Left equal highs here, so you could have longed when we went back in this fair value gap. There's this one. We never took the actual high, but it was some places to take some profit. But as you can see, this is extremely volatile. Move all the way up here, all the way down here, tap into this. Your entry's right here, bam. We had lots of ones right here. So I thought it was probably SMT here. 1, 2, 3, bang. Close under, enter right here. This would be your target, so it's not even trade, but then you could have 8 your fetch found quite nicely. This is a nice fair value up 10 turn. You don't want to use these bearish fair value ups, so this one was good, as you can see. We just want to keep the first of the two. or not necessarily the first of the two, but the one that is in a discount, which is that one. That's the smarter thing to do. And then you would have entered off this one along right here. Stop loss below here, because in this scenario, the price should not have closed below here because we already inversed. This is very powerful. So we had that. This was probably one of the better ones of today. And you know, at a certain point, this one did not work. Probably because we were pretty high on, and then we had this high day, failed to displace over this high day, and then closed back down. But I probably would have been off by the time of this trade. And then this trade is another trade that I took that was pretty good. I have this one documented. But I took like a screen recording of it. But I shorted inside. There was this fair value pro rate here. Shorted right here. Got my stop loss right here. Notched my stop loss right here. And then I targeted it here. You can say what you want about this trade, but that's a pretty good trade. You're able to get 18 ticks pretty easily. That's a lot. And then price, obviously went back up. You probably could have. There wasn't that many trades, and price was already closing below a lot, showing lack of volatility. So yeah, I'll create a weekly profile review for going into the next week. But it's just the same stuff. We're just staying completely focused. I'm gonna understand everything about the market and just kind of form it all together. I'm not finally, but I'm leaving Dodgy's Discord just because I don't want to be paying for it anymore, and I think it's better for me to learn on my own because I've learned enough of this ICT concepts and knowledge that I can learn more, but it's all free. I can learn everything for free, and I'm gonna keep on doing that. So I think it's just important that I focus on doing what I think is right, because at this point in my career, what I think is right has a high probability of being right. Most of the times, more times than not, which is why I've proven to myself that I'm able to win these trades. So yeah, going next week, staying confident, doing what we do every single week for months and months and years and years. Let's freaking go.